moment we have roughly 12 desalination plants at the moment within the CSG industry that are taking the groundwater from CSG operations and they're producing brine and they're sending that to ponds. There's 12 of those. On 12 of those sites, we believe we can build one or two of these upstream plants. Some of the larger plants might need 2 or 3. So that's the opportunity, 12 to 24 of these modular systems we can build on site. And an installation may be something like 5 or 6 shipping containers.
Welcome Bahay again on the occasion of a new presentation that just came out. I look forward to going through it with you, and I'm eager to learn to the newest developments.
Thank you, Sven. We've released a new presentation today, as we can see on the screen. We start off with a mission for the company. We're building an industrial water treatment company. So we've recently come out with the master plan, and this is a short form presentation to just summarize what Parkway is about and a little bit about our journey. So there are, of course, a range of disclaimers and forward-looking statements that we encourage people viewers to review. So as I outlined, Sven, the presentation is really outlining about how Parkway is building an industrial water treatment technology company, and the emphasis there is on the technology. That's really the focus of our company and where we believe value is ultimately created within our business. And I guess the presentation outlines, Sven, for today. I've got here a bit of a summary of the key slides, but really we just start off with just outlining the problem related to extractive industries. We believe there's a technology-based solution. We provide a little bit of a profile of the market, and we have, of course, covered a lot of the technology in the past, but there's a quick sort of a summary of the technology. And then a couple of slides on the coal seam gas opportunity and our master plan, and a little bit of corporate detail. So that's really the outline of the presentation today. We have a bit of a photo here, Sven, of a mine site in Spain and some acid mine drainage, and it's really quite an alarming site. But they're the sorts of sites that we're most interested in developing and delivering solutions for, ultimately to help with the rehabilitation. As we've sort of outlined in the past, really a core focus area for Parkway is some of these extractive industries, so energy and mining industry in particular. And these industrial processes, industrial operations produce a range of wastewater streams. So whether it's acid mine drainage, whether it's mining related wastes, or similar to the energy industry, of course, we'll be talking a little bit about oil and gas production, and in our case, the coal seam gas industry. So the problem is a whole lot of wastewater generation from these industries, and they're the industries that we're looking to deliver a solution to. So that's a quick snapshot. In terms of delivering a solution, the Parkway approach is, we believe technology provides the best opportunity to provide solutions for these industries. And as a company, and we'll get through to some of the details in a moment, we deliver a technology-based approach. And I guess the key differentiator for us really is that we're developing technologies that actually permanently address the challenge. So we're not trying to concentrate, the waste and bury it somewhere in a landfill. We're really looking to unpick some of these challenges and produce products that can be sold. And I think that's an important part of the value proposition. And ultimately, we're trying to develop technologies that will become best available technologies, best practice. So we're not looking at just making incremental changes. So really quite a significant undertaking. These are big industries, big problems that are difficult to address. And from a Parkway perspective, we're really investing a lot of time and effort to provide permanent solutions, permanent long-term solutions. So that's a little bit about the way we're developing our solutions.
All right.
We've covered some of these materials before, Sven, but there's a little bit of a snapshot here at some of the wastewater markets. And I guess if I could leave viewers with one key message, from all these industrial operations that exist today, less than 10% of the wastewater produced is actually recycled and treated. So that's really a large opportunity where a lot of the wastewater is just injected or released into waterways, and really quite problematic. And as we go down a more sustainability focused world, we think life will become more and more difficult for those industrial operations. And for Parkway, we've really building a business around addressing these opportunities. So We have a conventional water treatment business. So we provide, pumps, filters, membranes, and more conventional solutions. And that's the business that's really helped us get our foot in the door and help us build our business. But ultimately, that's, there's mature players in that area. And although we could build a significant business, that's not really as a small company where we create value. We've used that as a stepping stone to really get access to some of these larger, more complex challenges where we plan to deliver our own technologies. And that's what really the focus of this presentation is about. So in terms of technology development, we go through a very sophisticated process. We've really developed industrial technology development capability at Parkway in recent years, and we'll sort of touch on some of our capabilities in a moment. But in short, essentially, what we do is we start off with a problem where the client or the industry is all out of solutions. They're essentially, throwing their hands up in the air and saying nothing can be done with this. So we really are taking on very difficult challenges, and we're working our way through a range of pre-treatments, technologies that we've developed and we own, and a range of post-treatments. And we basically dial them in to a particular sequence to meet a particular objective. So it is quite complex, but the reward from that process is we end up delivering a solution, and ultimately that solution becomes very valuable, and there's an opportunity to create significant value for the client, reducing reagents, disposal costs, dealing with environmental challenges. And of course, for us, as the company developing that solution, there's an opportunity for us to share in that value creation as well. So that's really what our technology development sort of pathway looks like. And we have, of course, recently come out with a few examples of what this looks like in an industrial setting. So in terms of why is it that we can develop solutions to some of these problems that very large companies and industries have struggling with? That's really we've developed some capabilities in terms of our internal process engineering team. So we've gone and hired the smartest people we can find in terms of people who've got large process engineering EPC company backgrounds. We've been collaborating with Victoria University for many years. They have a range of industrial water treatment experts that are sort of globally recognized within very specific parts of the water treatment industry. We've secured funding together, and we've really developed some capabilities there to solve some of these problems, and that's something we've been recognized for a number of years. So that's really quite a important collaboration we have. And I guess I thought we'd introduce this new slide, Sven, just to provide a little bit of context of where we are in our journey. So
to start, I think this is actually a key slide of the presentation, I guess.
Yeah, no, look, it absolutely is. And I mean, I thought that now was a good time to bring this out because just to start off with, this, orange line isn't a Parkway line. This is a standard. You can sort of Google very similar images of, how technology really gets to market. And I guess something that's, a little bit interesting is this really resembles the Parkway almost share price journey in the recent years as well. So these things have a strange way of playing out for all sorts of reasons. But I guess the couple of key points I wanted to draw here is that getting new industrial technologies to market is difficult, takes a long time. That's just what it is. However, people who get that right, the rewards can be quite significant, of course, because, not everyone wants to take something that's, uncertain, risky, has, uncertain sort of timelines. There's a lot of challenges with doing that. But we've, over a number of years, specifically set up a company with this objective. And I think as a small company, been able to make a lot of progress very quickly. And I guess the key point I'd like to draw viewers to, Sven, is we've recently come out and outlined one of our technology packages has a particular fit within a particular market, in this case, the coal seam gas industry. And that technology, we've now, developed a master plan. So that's really the perfect product market fit because it's a multi-billion-dollar market. There's very, significant pain points. There's no other alternative. And we've come out with a plan to address the whole issue. So that will take some time, of course. But so that's quite advanced now. So that's now really will outline some of the execution plans there, starting off with an upstream plan. And we have a number of other technologies that are not far behind, addressing acid mine drainage and a few other, and a deep pipeline of technologies. So really very exciting phase of the company's journey because we think there's an opportunity now technologies that we've been, incubating and piloting and optimizing in the background, really it's time to, sort of pull the curtain back and really disclose those technologies and outline, what the investment case is. So that's I think, quite an insightful, hopefully helpful representation of where we are in our journey.
Yes, definitely. It's looks very compelling. So you're whetting the appetite for what's to come.
Yeah, for sure. So as the technologies have advanced, I mean, the next question is, so how do we as a small company get these technologies into market?
Exactly.
And we have, of course, been working with the likes of Worley for a number of years, but I thought it was a good opportunity to recap. We've got a number of new shareholders. Who's Worley? Why is it relevant to where we're going? So let's start off with the beginning. I mean, we're really taking on, high value applications in large markets. And really, we're targeting tier 1 clients. And that's important for a whole range of reasons. I mean, one is, of course, access to funding. But the other reason is tier 1 companies are more obligated to adopt best standards. So they really are our ultimate clients. And we outline in a moment, why progress on that front is important. Part of our go-to-market strategy, of course, is getting some of those conventional water treatment solutions that I outlined earlier. And that helps us get our foot in the door to be able to talk to those clients about, things that are perhaps a little bit more innovative. And we've outlined our business model in the past, where really we want to be licensing technology, but there are a few unique applications where we're actually better placed to deliver some of these technologies, particularly if they're smaller projects, higher margin projects. Then often it's easier to just build, own and operate that rather than trying to convince the client that this is, some amazing technology. They just want to pay you to, make their problem go away. So we're building a capability on that front as well. But some of those larger projects, to come back to Worley, I mean, they're a global engineering company. They work to deliver a more sustainable world. They operate within the energy, chemicals and resources markets. So really, from a Parkway perspective, they really are the ideal partner.
Yeah.
And
haven't they got exposure to the coal seam gas industry as well?
Well, I mean, before Worley acquired this energy and chemicals resources business, a large proportion of their business was within the oil and gas industry. So what they call legacy energy. So, and they're transitioning to, deliver many sort of first of a kind projects. They have, divisions that work on chlor-alkali plants, lots of capabilities that are immediately applicable to Parkway. So, and of course, we have an established relationship. We've been working with them for a number of years. We have a global partnership with them. We recently broadened that partnership to encompass the coal seam gas industry. And there's a lot of other projects we're working on in the background, actually, that we're hoping to get to a point that we can disclose. But in terms of public disclosures, we have a very deep, very collaborative, very positive relationship. And that's important to give our clients confidence that if we advance these projects to a point where we need to build a multi-$100-million plant, we have a partner who can actually deliver that. So that's very important.
Yeah.
Well,
it's a mutual benefit, isn't it? Worley is a door opener to their clients and is able to deliver ultimately a benefit and definitely what is interested in doing the work down the road. So it's a win-win situation with them, isn't it?
Yeah, absolutely. I mean, I sort of don't want to disclose anything inappropriate, but they are working with all the major global mining companies. Those companies are looking to adopt innovation, new technologies. Worley is ideally placed to put forward, hey, there's Parkway, their technologies can assist you. And from a Parkway's perspective, having that, that endorsement, that introduction, that support, from a Worley, as opposed to us trying to build that, is, immensely helpful. And, we're of course very grateful for that collaboration. So I'll leave that introduction there just in the interest of time, Sven.
Exactly.
But I guess another slide I thought I'd sort of bring in is this sort of explaining, we have this business, Parkway Process Solutions. It will sell you an ultrafiltration system, a reverse osmosis system, but how does that fit in with the technology part of our business? And I guess I thought this slide would be helpful that in explaining this conventional, because when we initially sort of launched this business, the market was initially scratching their head and saying, you've got these technologies, why are you sort of selling a pump and a membrane? And I guess I just wanted to and I've addressed this in the past, but what it does, it helps us develop internal capabilities. it helps us get closer to those clients. So if we can deliver a conventional solution, it's known technology to a client today, other than that being, a great business in its own right, what it does, it helps us get close to those customers, we get close to our suppliers, and it's really a nice launch pad to be able to introduce our technologies. So we've made a lot of progress there. And, I think that, sorry, Sven, I was just going to say, we recently released our sort of quarterly results, and for financial year 23, we turned over $5 million, which for a public company, it's not enormous, but from, zero revenue 18 months, 2 years ago, it's growing. But really, and, that sort of has 30% margins, sometimes higher, sometimes lower. But really, where the ultimate growth in this business is going to come is working on projects where we receive tens of millions of dollars a year in licensing fees, and they're higher margin. Often we're not necessarily even involved in the ownership of those projects. And ultimately, if we're able to build a business that's, we're receiving royalties or margins of, $5, 10, $20 million, that's what helps get us from a, a 10, 20, $30 million company into a $500 million company. And that's been the plan from the beginning. And I guess what's exciting about this presentation is we can start showing people where are these projects, who are the clients, how are we going to get there. So very exciting phase of the company's growth.
Yeah, definitely very helpful, because I agree that there was this confusion between what is Parkway now. Is it a service provider or is it a technology company? But I think you explained it very well, that the one is incremental to the other, but the leverage really stems from the technology, and that's something we're going to talk about now, I guess.
Yeah, no, absolutely right. That's right. So with that in mind, we've sort of outlined about some of the challenges, the benefits of technology, how Parkway's developed some capabilities, and we have, of course, recently outlined the opportunity within the the Queensland coal seam gas industry. We have, of course, recently sort of released the master plan, but I thought I'd provide a quick snapshot. There's essentially an industry in Queensland, unconventional gas industry. The industry's invested, more than $100 billion developing a range of gas projects to produce LNG, and that's obviously an enormously significant industry. Unfortunately, one of the biggest challenges, though, is the industry produces a waste brine that the industry is storing in brine ponds, and ultimately, the industry is looking to build brine concentrators, salt crystallizers, and bury the salt, and that's a very expensive exercise. It's a very unpopular exercise. And really, it's something that's bothered the industry and even the community, to be frank, for a number of years, more than a decade. So that's really the challenge that we see. And ultimately at Parkway, we've been working on how do we avoid some of this expensive capex and ultimately divert the waste products from landfill and produce products. That's really the opportunity we see here. There's a lot of info here. I'm not going to go into any detail other than to say the coal seam gas industry is, developed over a number of decades. We've been following that closely. We've been involved in a number of projects, and in parallel, Parkway itself and including companies that were involved before Parkway and eventually ended up in Parkway, we've methodically developed a capability in terms of people, in terms of technologies, in terms of piloting, and really in recent years been making a number of announcements. And we really got to the point where earlier this year, a month or so ago, we released master plan, a very detailed plan of where are these projects, what are the technologies, how do they compare to the alternatives, and how are we going to solve this problem. And I must say, since releasing that master plan, Sven, we've really been overwhelmed with the amount of interest and goodwill that this really ticks a lot of boxes, all the boxes. So really exciting journey. And I guess the other takeaway from this is, these are, the so-called overnight success is invariably a 10-year journey.
Yes.
And I put that forward just to sort of outline that, sometimes we get comments around, you've outlined all your plans and there's competitors out there. And we're sort of like, we'll bring it on. If you're willing to invest this amount of effort over this period of time, then, you deserve every success. So it's really been quite a journey. To outline the master plan, I mean, it's difficult to, of course, summarize 55 slides in sort of 30 seconds, but basically the plan and is available on our investor hub. But really the plan ultimately involves taking waste brine, putting it through our upstream concentration, downstream treatment, and it essentially takes waste and it produces products. And that's a process that's gone through full feasibility study for one of the largest coal seam gas companies. We've produced actual products that are being qualified to meet specifications. And we actually released, as you're aware, Sven, very detailed techno-economics as well. What does this cost at a project level, at a hub level, at an industry-wide level? We're catching up with government and other sort of stakeholders next week. So that's a very exciting opportunity.
Yeah.
And ultimately, I realize this is very small here, but what this involves is diverting that brine from landfill, producing products and supplying industry, and that process creates an enormous amount of value.
Yeah, I guess the real challenge now is to translate that master plan into single manageable steps that are can be managed by a small company.
Yeah, no, that's absolutely the case, Sven, and that's really the purpose of this presentation here. Is we've outlined a very detailed plan. It's a very ambitious plan, but there is, of course, a nearer term opportunities as part of that plan. And to be frank, we can actually build a very, very significant company even off the first couple of steps of that master plan. So that plan was meant to be a bit of a manifesto to outline, so where does this plan take us? What's your ultimate vision for the industry? And that was most informative. But we certainly don't need to achieve all of that to become successful. That's just the scale of the opportunity in front of us, ultimately, yeah. So again, I won't go deep into the detail here, but essentially the starting point for the industry is there's waste brine. One of the larger operators spent $1 billion building a brine concentrator, and that essentially concentrates the brine. And that's sitting in ponds at the moment, and they need to spend enormous amounts of additional capital building crystallizers, and ultimately they'll have a waste salt product. So that was the example I outlined at the beginning of the presentation that the industry is adopting. Very unappealing, but that's one of the projects. The other three of them.
But that was deemed to be best available technology at the time.
Yeah, absolutely. So everyone involved, from industry, the client, that's the best approach. So that's you've got to make decisions with what's available at the time. But the other three projects at the moment, they have waste brine. It's sitting in ponds, and they're contemplating, do we go down the path of what this existing company, and that company was Shell, QGC Shell. So at the moment, they're concentrating that brine, and the other three companies are saying, are we excited about spending another $1 billion ourselves to concentrate our brines? Well, not really, because we're just going to have more brine that is still going to be waste. It's not really a solution ultimately. So what we've come up with as part of master plan, we had an upstream technology where we concentrate the brine, and we had the downstream technology that produces products. And what we're saying now to industry is, although we have a solution to produce all these products, we don't have to adopt the full plan right now. We have an opportunity where we can take your brine, we can concentrate it, quite frankly, at costs that are much lower, much lower, sort of
a fraction of the costs. Yes,
exactly. And there's some commercial sensitivities there. We don't want to sort of come out with all the details publicly right now, but we're giving the market a bit of a sense of where that sits. And we're providing a concentration service to the client where ultimately it's faster, it's lower cost, but this is the most important detail. It's a stepping stone to delivering an actual solution, because if you've delivered the upstream part of the process, then at some later stage, you can adopt the downstream and you'll actually generate revenue. You'll actually get rid of your salt. You won't be stuck with a pile of salt that you disposed. So that's really a part of the upstream solution we're outlining. And I'll just jump on to the next slide, Sven, because we provided the market with a sense of what does that all mean from a investment opportunity. So these delivering one of those upstream solutions, they vary, of course, because there's different projects. They have different capacities at the moment, and we provided some details of that in the master plan. But there really is an opportunity to build 12 to 24 of these systems. Some sites may need one smaller plant, some may need 2 or 3 plants to meet all their requirements, but that's sort of order of magnitude, number of plants. and this is, I guess, a key detail, it would only cost us around $10 million to build one of these plants. They would be containerized, so there's no permanent installations. It makes permitting, the feedback we've had from industry is it would make the permitting process a whole lot easier because there's no permanent installations. These would be factory built, so they can be rapidly deployed to site. So these are really of a scale where a small company like Parkway could actually build and own and go and deploy one of these things, particularly as the economics. And, if you were to sign a multi-year take or pay contract with one of these operating companies, it's low risk for them because they don't need to pay the CapEx. If the technology works and provides a concentration service, they pay you for it. It's a very easy sell. It costs a whole lot less than the alternatives. The alternative is the client has to go spend hundreds of millions of dollars on a concentrator, a brine concentrator. So telling them, why don't you pay us, $10 million a year or $15 million a year without any CapEx is actually very attractive. And, for commercial reasons, we haven't sort of provided the OpEx, but I guess one reference would be this. If the client had a brine concentrator that cost them nothing, they just found one and, behind the shed somewhere, it would cost them more to operate. It would cost them more to operate that plant than what we're saying they need to pay us to be able to provide the same concentration service. So it's a bit of a no-brainer for them. Don't worry about the CapEx, pay less OpEx, and we'll come along and we'll toll treat this brine for you. We'll concentrate it. You'll have smaller brine ponds. That's a great solution for the client. Fortunately, there's also a business case for Parkway, Sven, because in addition to charging the client an undisclosed amount of cost that we're going to generate revenue from, we've sized these plants at a capacity where we need to be able to generate at least $5 million a year in operating margin, because there's a lot of work here to design, build, negotiate, and you don't want to do that to generate $1 or $2 million a year. It's really got to be worth our while. This is patented technology. So from our perspective, we're providing the market with some feedback that we think we can build, over time, a number of these plants. We think there's a great value proposition for the client. And from a Parkway perspective, being able to build an $8, $10, $12 million plant that you're generating significant revenue and netting back $5 million a year, we think, after capital recovery, we think it's an amazing opportunity. And I guess it doesn't take much of imagination to be able to see that, if you were to build one of these, several of these over time, and you're generating $10, $15, $20 million a year in margins, and these are long life sort of projects, then in our view, that should enable us to justify a very significant valuation. I mean, how many companies are there that are generating not top line revenue, a margin of 20, 30, $40 million a year? If you look at sort of peer group companies, particularly overseas, there's visibility here potentially to build a $500 million, $1 billion company only off this opportunity without going down the whole downstream process, which we're committed to. We've got to take it one step at a time. We're a $20, $30 million company. We're not going to start off building a $500 million chemical plant. And this is technology we're familiar with. These are plants we're familiar with. It's a scale we can execute. There's no other alternatives that can provide this service in the near term. So anyway, a really exciting opportunity, Sven.
Yeah, may I take it one step back just for clarification? You're talking about the opportunity to build 12 to 24 systems, and we're talking just about the upstream concentrations of brines, so to speak. And do I understand it right that each system represents one of those plants, potentially yielding 5 million margin a year, or is that a system different from a plant?
Yeah. So look, your understanding is correct. Maybe let me go through just a sort of in sequence. So at the moment we have roughly 12 desalination plants at the moment within the CSG industry that are taking the groundwater from CSG operations and they're producing brine and they're sending that to ponds. There's 12 of those. On 12 of those sites, we believe we can build 1 or 2 of these upstream plants. Some of the larger plants might need 2 or 3. So that's the opportunity, 12 to 24 of these modular systems we can build on site. And an installation may be something like 5 or 6 shipping containers. So it's something that's readily deployed. The cost of that single installation would be something like $10 million. Some will cost a little bit more for the bigger ones. Some will be a little bit cheaper for a smaller installation. But that's our cost of building and deploying one of these plants. And in addition to building one of these plants, we would need to pay operating costs to be able to operate, energy, operators, reagents, etc. And after we pay for our operating costs and we amortize our capital, we think we can make an operating profit from each of these plants of the order of $5 million. That, some of them will be a little bit lower, some will be a little bit higher. So that's really, an amazing sort of payback, sort of free cash flow generation.
Yeah.
But what allows us to do that is obviously all the effort and investment we've made in technology, right? Which enables us to achieve that. So that would be a single installation, and there's an opportunity to build, 10, 15, 20 of these over time, we believe.
Yeah, it's still a stretch of imagination to think that this one company basically tried to resolve the concentration and spend $1 billion, and basically you are proposing a similar service not at a fraction of the cost and fraction of the OPEX. So I think this should be pretty much actually a no-brainer, especially for those large companies that earn in the billions as well.
Yeah, obviously we've been working on this for many years to put ourselves in this position to develop something attractive. I guess I should just be, I think it's important to be precise in our communication. So I guess I should just clarify, Sven, we are absolutely taking the waste brine and reducing the brine very significantly by more than 2/3. The numbers we've quoted are about 70%. So it's a very significant volume reduction, but it's not quite as significant as the volume reduction that an existing, a brine concentrator would achieve.
Yes.
In any case, the dollars per cubic meter we're quoting are only for the concentration we're providing. So yes, even though we can provide, 2/3 of the benefit, we're doing that at a cost that's, 1/10 of the cost. So, on a pro rata basis, on a specific dewatering capacity basis, nonetheless, that's right. It's very attractive. And I guess just to summarize those opportunities again, this is a fast and effective solution for the client. It's very attractive in terms of the price. The client's not required to pay the CapEx at all. So we recover our CapEx over a number of years of operating these plants. So that makes this a more OPEX waste management decision for the client, as opposed to a, $100, $200, $300 million, capital investment. And ultimately, other than this being, making great financial sense for the client, enabling Parkway to, build a real sort of a investment opportunity, the other really attractive element is this is one half of a full solution. So once we've treated the brine and produced an activated brine, that brine is then at a stage where we can take that downstream, and that may be at a later time. It may be in a number of years' time where we can then convert that to saleable products. So that's really the opportunity. And
yeah, I think that answers the question and the concern, addresses the concern of how Parkway, with limited means, can actually approach this, because you're dividing the problem into steps. The upstream is very feasible. Containerized actually means, to me also, that it should be available in a short period of time. Actually, what's the time from contract to delivery? What do you think? Is it 6 months? Is it a year? Or how long would that take?
So at the moment we're going through, so just to go back on the timeline just for a second, it was by the end of March we delivered a full feasibility sort of year long, and within 3 months we had extended that to a full industry-wide solution, and within sort of a month or two of that we've now come up with a full upstream solution. So we're moving very, very quickly, and really where we're looking to be is within the next 3 months have some detailed design for what one of these systems looks like, and that helps us lock down equipment selection. I won't go into all the sort of the engineering steps required, but I guess what I'm getting at is the first build, Sven, maybe closer to a 9 to 12 month build, because it's, first of a kind, a whole lot of quality assurance, factory testing and things like that. And we're setting up facilities here in Melbourne at the moment. I'm in Melbourne. We have a dedicated facility that helps us pilot and build these facilities, build these plants. But once that process is established, we think the turnaround will be closer to 6 months to be able to these projects. and certainly the scale of these projects, I think the financials are so attractive that being able to fund those sorts of projects, even for a company of our size, we think is readily achievable. I might just jump onto, there's a couple of slides here I have, Sven, just summarizing at a corporate level who Parkway is, and I think that might be useful. So we're only capitalized at $25 or so million, so still a very small company. The top 20 shareholders own roughly 45% of the company, so we have a great relationship with the top 20. And as you'd be familiar with, Sven, over the course of the last year or so, we've had a number of larger European-based investors, acquire a reasonable proportion of the company on market. So that's been a great opportunity to bring in sort of some more patient investors into the company. At the moment, we have at our 30 June, we had $2 million in the bank, but we also own a couple of $1 million worth of inventory, plant and equipment. We haven't raised money for 2.5, 3 years. So we're really quite a efficient operation. And this is just a photo of one of those brine concentrators we were talking about earlier, Sven. So really quite significant operations. And we would hope to be able to sort of avoid having to build something so complex with something that had a smaller footprint, something like some of these sorts of containers, I guess, for reference would provide an order of scale.
Yeah.
A little bit about our team. As you know, having a small company with big dreams, a lot of that rests on the people who run the company, in terms of have these people, are they familiar with the industry, some of their track records. So over the course of the last number of years, we've brought people into the company that specifically have domain expertise in the energy and mining sector, waste sector, technology sector. So I won't go through everyone individually, but other than to say at a corporate, at a board level, I'm supported by very accomplished, experienced executives who've spent decades in operating in these industries. So have great sort of support there as a team. And similarly, we brought Mike into the business to lead some of the commercial negotiations as part of master plan and more broadly. And obviously a very experienced engineering team where I've listed a number of the more experienced members here, but all people who've worked for large global engineering companies, designing and building plants very similar to what we're contemplating here. So a lot of industry real world experience. And I think that's very important, and it probably explains somewhat why we've been able to make the progress we have in terms of clients and partners. I think it's all about the people.
I actually followed pretty closely your new acquisitions of personnel, and I'm always pretty impressed of the caliber of people that you attract at this early stage, and that always is for me an indicator that people trust that you can actually execute the business, leaving established companies and their jobs behind. And joining a startup effectively, basically.
Yeah, no, that's right. And I think, and also being able to capture their imaginations as well, Sven, being able to come into something that's earlier stage. I mean, you need obviously people that are experienced, but you need people who are also passionate, about being able to, take some calculated risks, be able to explore the various opportunities. So really is quite a journey. So I guess in addition to some of the corporate information and building a team, also in the background over the last couple of years, we've been able to achieve, ISO certifications. All these are prerequisites to be able to deal with these larger companies, so we can become qualified to be able to provide them services. And, over the course of the last number of years, we've also been able to, and this is only a small selection, we've got hundreds of clients we've been able to work with over the last number of years, but these are obviously some of the more prominent, energy and mining clients that would, clients for our technology business, hopefully one day, and obviously a range of well-recognized industrial companies that we've sort of just included just to be able to give people a sense of this is the caliber of company we're working with. These are large, well-resourced companies. They trust Parkway to provide, products, services, solutions, and obviously we're working very hard with some of them to deliver technology-based solutions. So really, I think quite an achievement in a relatively modest period of time.
I would totally agree. I think you're almost let's say understating what you have delivered so far, and I think what I would like to emphasize from my side is I think we should not underestimate how transformational the solution is that you're just providing to this first industry, the coal seam gas industry, because the way I look at it is, okay, if Queensland was to adopt, or if the players in Queensland were to adopt this technology, then there's a potential elsewhere in Australia, but elsewhere on the globe as well, and on other, everywhere basically where this brine problem occurs in the connection with gas production. So I think there's a huge opportunity beginning with a small first stepping stone in hopefully delivering one of those pre-concentration plants in the near future, I would say.
Look, I mean, that's a great summary and a great point you make, Sven. That's definitely the case. I mean, these plants, these modular plants we're talking about designing and building imminently, they absolutely have applications outside of Australia. And we, in our quarterly, made reference to a number of projects outside of Queensland that relate to wastewater treatment from gas production, but also a number of international opportunities. So viewers may not be aware, but key markets such as the US, for example, it's becoming very difficult to inject waste brine from shale gas production. So that would ordinarily be disposed of in a waste well. And what that means now is all of a sudden we are seeing brine ponds starting to be pop up around some of these gas basins. And that's all of a sudden resembling a very similar challenge to what we've experienced in Queensland. So Parkway having a solution with, to address some of that markets are very exciting. And we're working with a number of big players there at the moment that we're hoping to get to a stage that we can disclose. And similarly, some of that modular equipment that we're designing and building, that we've developed some capabilities in our PPS part of our business, that also has immediate applications in some of these mining applications as well. So whilst we're only talking about CSG at the moment, we're trying not to confuse the message. We absolutely are committed to the mining industry. There's very large markets, and we absolutely have technology-based solutions for those markets as well. But as you know, we're a small company. We've just got to take it one step at a time and ensure we keep executing. So they're very exciting.
Well, thank you for basically walking us through the presentation. I think it is very much to the point, and it's exciting to expect. Well, I'm really looking forward to seeing news on the execution now.
No, absolutely, Sven. So I guess just to summarize for viewers, I mean, we've obviously outlined some of the very large addressable markets Parkway is working on, and our angle is, bringing some of these innovative technologies to market. Hopefully we've been able to provide some of the, the strategic insights that we bring to solving some of these problems. We're sort of very methodical in the way we think about these technologies, these markets, scaling things up. Obviously, the team and some of the capabilities we've been able to bring into the company are important. And I guess in summary, technology commercialization is absolutely a long-term journey, but I guess, or I hope we've been able to sort of demonstrate at this point that, some of our technologies have immediate applications within very significant markets. And we genuinely feel that we're really at an inflection point. We have an opportunity to be able to roll these things out, in the relative near term, so far as technology is concerned. So, great, exciting stage of the company's growth. And appreciate all the questions, Sven.
Well, appreciate again for going through this, and I'm, as I said, very much I'm excited to see what's coming. Thank you so much.
Excellent. Thanks, Sven.